I mean, the gym's a good place to be, especially in January. And I know that we talked about, New Year's resolutions. I don't know, Todd, do you have one?
Do I have a gym in my basement?
No. Do you have a New Year's resolution? Oh, my.
Yes, as a matter of fact, I do have a New Year's resolution.
Okay. You don't need to share it with our listeners.
I'm not going to share it, but I do have a New Year's. It's not even a resolution. It's kind of a Zen goal thing type.
Okay, cool. I'm not a resolutioner myself. I'm more like
just be more Clinton.
I'm New Year, new me. I've been just throwing people. I'm like, New Year, worse me. New Year, more me. No, I'm kidding. I'm just like New Year, same me, and I'm okay with that. I'm like, if I'm gonna make a resolution, I'm gonna do it in February, or I'm gonna do it on the first of the month or the first of the week. I just always love a fresh start, and for me, I always love a new quarter or a new season or a new month or a new day.
There's something about that, isn't there?
And, I think that makes a really good segue into what we're going to talk about on this segment. We're going to talk all about refinance. And, I think that can be very daunting for people, Todd.
Mm-hmm.
I think sometimes there's a negative stigma around refinancing. And people are like, well, I'm starting again. I pay all the interest at the beginning of my mortgage term or whatever. That's not really true.
Mm-hmm.
You pay higher interest the longer your amortization is. If you do a shorter am, less interest. Longer am, higher interest. That's just the reality of the numbers. And, mortgages typically in Canada are either capitalized semi-annually or monthly. It just depends on the type of mortgage that you have and the amortization. That's how the interest is calculated.
Yeah, for sure. Okay, so when it comes to refinance, again, what does that imply? That jeepers, I've done something wrong. Here I am, I have to refinance, as opposed to, isn't this great that I have this asset that I've taken care of, and that can help facilitate me getting my finances in even better shape, right?
You used a really good term earlier. Instead of refinance, it's kind of like retool.
Yeah, retool.
Right?
Yeah.
And maybe we are refinancing to do a longer amortization. That's very common right now, especially where the rate environment is. People are choosing to do a longer amortization because they want to bring down their borrowing costs. Not so much the interest cost, but the amount of money that they're putting out every month. So if you do longer am, you're going to pay less principal.
Mm-hmm.
Okay, so we're doing some of those types of retooling, we'll call it. But another reason why someone may want to refinance is maybe they want to do some improvements to their property. Maybe they want to do a renovation. Maybe they need to do a renovation for whatever reason.
Mm-hmm. Yeah.
I think the other reason that people refinance sometimes is for investment purposes, and that's normal. We see people that maybe own their house free and clear, and sometimes will put a home equity line of credit on it or a mortgage on it for investment purposes. But I would say the main reason why people want to refinance, Todd, is to pay down other unsecured debt. Canadians are at an all-time high in terms of their level of indebtedness, and you can refinance up to 80% of the market value of the property.
Mm-hmm.
And you may refinance to pay out, lines of credit, credit cards, loans. And that is very, very common. We are very fortunate here in Halifax that we have had, the property values increase. And the people who bought a house, prior to 2020 or even 2020 and before have a lot of equity in these properties.
Mm-hmm.
And I really do challenge everyone who's up for renewal. It's a great time to think about maybe doing a refinance. But we still see people all the time that are midterm, maybe midterm, and they want to do a refinance for whatever reason. And, that's okay too. I think sometimes it's harder to walk away if you have a very low fixed rate. Sometimes it's harder to walk away from that. But I think it's looking at your situation, and I think really understanding how much equity do you have and really how much do you owe.
Okay, so are people refinancing right now because of the interest rates?
I think people are refinancing when they're at renewal because of the interest rates. I would say that is a fact. I think that people that are in a low fixed rate right now are probably going to ride it out, by and large, if they can.
Yeah.
But if you're up for renewal, we're doing a lot of refis at renewal to either pull the equity out or do a longer amortization or do a home equity line of credit. That is very, very, very common right now.
And again, it's not something that, because if you're refinancing, you'd like to be able to use that money to pay down debt or put money into your house. So it's unfortunate when you just simply need to do that just because the interest pay or the mortgage payment is going to be too high based on the current interest rate
environment.
Atmosphere. Yeah.
You know what? I've had clients that have very aggressively paid down their mortgages over the last couple of years. They were in a very low rate. I think they had like 15 years left on their amortization, and now they're down to like 5 years. But now it's coming up for renewal, and they say, Clinton, like, we just can't handle paying at this rate. And there's one I just increased to a 13-year amortization. And they said, you know what, Clinton, this is not forever. You know, we're going to do a variable rate, and we're going to hope that these rates are going to come down, but we're going to leverage things like payment increase or a lump sum payment. We're doing this to just protect our financial future. And you know what? I said, you know what? This makes really great sense. I love what you're doing. And, you know, it's going to give them that flexibility that they can make some decisions and they can plan. And, you know, they really paid it down while the rates were low.
What have you seen some of the largest numbers in increases when people's interest rate or rates renewed or their mortgage renewed, and they went from a 2.5 to a whatever? What are some of the biggest numbers that you went, wow, that's tough?
Well, this is where the misconception is. If your interest rate doubles, your payment is not doubling, but your interest carrying cost is doubling. That's what you need to remember. I've seen clients that are paying $1,000 and $2,000 more per month. Because of the higher interest rates.
One and up to $2,000.
One up to $2,000, but it all depends on how much you owe. You know, if you only owe $200,000, maybe it's only going up a couple $100, right? But if you owe $1 million, maybe it's going to go up a couple grand. And it really depends on, you know, how much you owe and what the rate was that you had.
And ostensibly, if you have, I mean, not every. There's a misnomer that, well, if you've got that kind of mortgage, then you've got an extra $1,000 kicking around. Some people don't, right?
I can tell you, the people that have a mortgage for $1 million, they don't have a couple hundred. They don't have a couple $1,000 like
kicking
laying around.
Just,
Typically, no. Typically, no. I'm not going to say this is like by and large the rule. But I can tell you, there's people that have a mortgage at $200,000 that have tons of money in the bank. There's people that have a mortgage at $200,000 that are paycheck to paycheck. The amount you owe has nothing to do with your economic situation. And I think that's a misconception that we think, right? Like, it's like, oh, we see this big, you know, mortgage amount. Okay, these people owe, you know, $700,000, $1 million, $2 million, whatever the number is. They must be rich. Not always.
Not always.
Not always.
No. Okay, so when it comes to refinance, obviously people they're going to have to go through their credit again.
Of course,
they're going to have to get their notice of
assessments.
It's
a new application.
Again. It's a new application, completely fully underwritten. So be prepared to, and you do a great job of saying this is what I require. Yeah,
we always love to have a really good, you know, look at where things are at. I never want to go through the process and get someone an approval if it's not going to be like rock solid. I've been doing this a long time, Todd. As you know, I've been doing this 17 years. We've done almost $1.5 billion worth of mortgages, like over 5,000 transactions. We know what we're doing. And I'm like, just give me these few things, and then we'll know where we're at. Really what we look at is we want to get a list of your assets, but then we verify the income, and we verify the property details. So we'll get like the previous mortgage statement and the property tax bill. We want to know how much you owe. We want to know how much you're worth. And we want to know how much you make. Those are really the things that we want to know. Because when we get an approval, I want to know I'm going to the right lender. And I also want to know that we're going to give you the right setup for the next years of your life. Because everybody's situation is different. I want to know how long you're going to keep this property. Like, what are your plans? Is your life changing? And I mean, not everyone has a crystal ball per se. But sometimes people know what's going on. And sometimes people at least can tell me to be like, hey, Clinton, I'm retiring in 5 years. Perfect. That might change my plan. That might change my recommendation on how we're going to proceed.
Yeah, and give you good information. Don't hide anything. Just get it out there in the open, right?
I've seen everything, people. Like, honestly, there's nothing that I haven't seen. And although I've done so many transactions, every day I see something new. But just due to the amount of experience that we have, like with me and our team, we can work through these challenges. And I always say we can get a mortgage for everyone. It's just how challenging your situation is, and do you have enough equity or do you have enough skin in the game to make it work? If you've liked what you've heard and you want to learn more, feel free to visit us online at teamclinton.ca.